Hello and welcome everyone to this week's episode of the Framework Podcast. I'm your host as normal, Jamie Hopkins, and today I'm joined by somebody who, actually it's really my first time getting to meet you, but I followed you on LinkedIn. We've been connected for a while, and I keep seeing all these different stories about your company, UNest, and different articles, and just you, and I was like, I really want to have her on because I just want to have a conversation anyway, and so I was like, hey, this works pretty well. So, really excited for you to join us here today, and for those who don't know you, can you just give us the 30 seconds, who you are, what you do, and then we'll go through your whole story, but just as a quick kickoff.
Sure. Thank you, Jamie. Super excited to be here today. My name is Ksenia Yudina. I'm a CEO and founder of UNest, and UNest is a money app for parents to save for their kids' future. And before starting UNest, I spent about 12 years in the financial industry, most recently as a vice president at Capital Group American Funds. And our goal and mission at UNest is to make sure that every parent across the United States, regardless of income level or economic background, has a chance to save for their kids' future.
Yeah, that's a really beautiful, mission and value statement there. So it's going to tie well to one of our first two opening questions, but I know you said you're in LA, and I see you're kind of back in the office, which is nice, right? We're moving back. I'm in my home office, but I'll be in the corporate office again tomorrow. But what's your favorite thing about food? So this is kind of the icebreaker question we ask everyone, is just food. Obviously, LA has a lot of amazing food options, but is it a favorite dish? Your family. What first comes to you when you think about food?
The first thing that comes to mind is sushi. I'm a big fan. Everything sushi, sashimi, like in LA, we've got so many great, sushi restaurants. So highly recommend for anyone who does not live in LA, when you hear, please attend one of those.
When you go to sushi restaurants, do you kind of pick rolls or sashimi, or do you just say, hey, bring me something awesome out? Which avenue do you go?
Yeah, I love sashimi. I love sushi without rice, and I love anything that's cheap specials.
Yeah, awesome. The next one is we like to ask this one, which ties very well to the UNest mission. Is what was your first money memory? Do you have one personally, good, bad, growing up? What was your first experience with money?
That's a great question. All I remember about me being a kid is that I was really into saving. Every single, opportunity that I had to get my hands around money, I would always save. So I'm a big saver.
Okay. Did you have a bank account at an early age, or did that come later?
No, I grew up in Russia, and obviously kids did not have an opportunity to have a bank account. So I was just putting the money under my mattress.
Yeah. Do you remember your first big purchase? I mean, and big is relative, right? But I think I've asked people that, and they said, it was candy, or do you have a purchase that stands out in your mind where you actually took that money and used it for something you wanted?
That's a great question. So all my savings, I actually, just took everything that I've got when I came to the United States. Basically I came here with $500 in my pocket. I thought it's a lot of money, and that was my kind of start into my adult life. I was 18 years old.
Okay, so kind of you used it to get here and get started, right?
Pretty much, yeah.
Well, tell us a little bit about that. I mean, you said you grew up in Russia, and tell me a little bit about how'd you come here, and kind of what was the driver behind that move?
Yeah, so throughout my childhood, I always just wanted to be very independent from my family. It's interesting how you raise kids in Russia, you always want them to be successful and educated, but it doesn't really matter where they go to school. Usually they end up working for their relatives, for their parents, or someone. And I went to university. I was studying Like my major, I believe, was international marketing, and that was something I was very passionate about. But my dad told me like it doesn't really matter like what you study, because you will end up working for my company. And he was a big executive at like one of the Russian conglomerates. And I was 18. I was, like I said, like strong-willed and very independent, and I really wanted to just build my own future and my own destiny. So that was like one of the biggest drivers of me trying to get away from my parents. And the first opportunity that presented itself was, my trip to the United States. So I was 18 years old, just graduated from, I mean, like I just finished the first year of university, and it was actually a summer program for students where we were supposed to come here for like 3 or 4 months, work at the low-paid jobs, make some money and come back. And I ended up, coming to Florida. And I just fell in love with the country. Like I looked around, I was like, oh my gosh, this is a paradise with like palm trees and ocean and people smiling at you. And why would I ever want to go back to my hometown where you have, winter that lasts 9 months in a year? So
Yeah. So the palm trees won you over, right? You're like warm weather and
absolutely, absolutely. And then like obviously the opportunity to just like build your own future, right? Because like everything I've heard about this country is that like anyone can have a chance to be successful and get education and have like all those opportunities. You don't need to be like born in rich family. Like you can actually build your own future. That was like so attractive to me. I was like, I just called my parents and I was like, look, like it's not about palm trees, it's not just about palm trees, but about the opportunity to get the best education I can possibly get, and I'm happy to stay and put myself through college.
yeah, it's I mean, I do think sometimes people here, we even forget about that, right? Like just the amount of opportunities in the United States to, as you said, kind of build something up. And obviously there are hurdles here too, but it is a place of a lot of opportunity. What was the job you did in that summer program? Like where in Florida were you, like near Disney or?
No, we were like, working at hotels as housekeepers and at McDonald's, and it was like really like, any 18-year-old, like the first job, like you can
Yeah.
imagine, like that's what we did.
Yeah. And so did you finish university here in the States then after that first year?
Yeah, so I spent like just a couple months in Florida. I realized that as much as I like Key West, so Key West was my first destination. It was like a tiny island without like
Hmm.
universities or real job opportunities. So I realized I need to move somewhere like like to a larger city, and I moved to LA, and I got into Cal State Northridge for my undergrad degree. And at that time, I was already like working, like actually found the first real job. I was like 19. I got into mortgage industry, and I received my real estate agent's license. I realized that I love the finance part of my job much more than I like the real estate part of my job. So like when I went to Cal State Northridge, finance was the major I picked.
Okay. Yeah. So were you selling houses then at that point, or were you like more office oriented?
Yeah, so when I was like in the mortgage industry, and by the way, it was like a year before the whole like mortgage crisis happened. It was like the best timing. It was like '08, oh no, '07 when I started working at the mortgage company. And yeah, no, I wasn't selling houses. I was just like helping people to
Okay.
refinance their homes, so getting like the first mortgage. But it was interesting like to witness the entire like rise and fall of the industry of like finance and mortgage industry. And of course, like when I graduated from Cal State Northridge in '09 with my fabulous degree in finance, people were like losing jobs in finance left and right, and companies were shutting down. So that was a fun time. So what I decided to do actually, I kind of pivoted my career and I got my real estate broker's license,
Okay.
and then I started specializing in actually selling the homes. But it was like a very kind of unique skill set when I was working on short sales. So I don't know if you remember,
Yep.
Jamie, like, a lot of people were like underwater with their homes, not unlike right now when it's like housing boom and, the price is so crazy. But yeah, a lot of people were underwater with their homes. So my job was to actually call the banks and negotiate the lower payouts and make sure that those people who were struggling financially actually can, get out of their houses without ruining their credit scores too
Yeah.
much, and with like getting some financial help, like relocation costs from the banks.
Did when you graduated in '09, did you pause for a moment and be like, Ksenia, like, what is finance really the right market for you? Did you have that worry at that point? Because like that's that 08, 09, 2010 range right there was not the best, right, for finance related job
Yes,
opportunities.
absolutely. But like I didn't give up on my passion, right? Like I was still like very interested in that career, but I realized that that timing, wasn't great to find a new job and start career in finance. I was just maybe like 21 or 22 years old. What I did have is amazing mentors, actually from Cal State Northridge, and those mentors recommended that look, recession is a great time to go and get more education. So like they were, if you're interested in finance, go and get your MBA in finance and go and get your CFA designation, which is like a golden standard in finance, and use the recession, like this downtime, as an opportunity to improve yourself and improve your skill set and improve your knowledge. So I took that advice very seriously. I did not give up on my passion. I started doing real estate just to make sure like I can pay my bills, but I invested heavily in education.
Okay. So I know you have the CFA after your name, so you finished all three levels of that, I'm guessing. And yeah, was that as hard as a lot of people for you, or did you just enjoy it a lot?
It was extremely hard. I enjoyed it a lot. and it was everything that people tell you about CFA. I actually finished the first level before I went to UCLA Anderson to get my MBA. And then I pretty much had to put it on hold for 3 or 4 years because it was like nearly impossible to have a business,
Hmm.
getting your MBA and having a CFA. CFA is a huge time commitment. You pretty much need to put everything on hold for 6 months. And I was like, okay, the best thing for me and my family pretty much is to take that break from studying. Then after UCLA, I went to Capital Group. That was my like first job out of business school. I was a vice president, and again, like for the first year, I couldn't study for the CFA because it was like just too much for the first job. What I did, like I waited that first year to get like really proficient with my job, and then believe it or not, I got pregnant with twins, and I decided that maternity leave would be an amazing opportunity to study the CFA level two. And I already had like one kid on my hands, so like I don't know how, like where I got all this like energy and power, but when I went to maternity leave, I actually spent the entire 4 months just like nonstop study for level two, and then I went back to work, and I like having again like 1 year old twins, invested a lot of time study for level three, and then yeah, passed all the levels. So I'm very proud of it.
Yeah, well, that's even CFA is such a it is a challenging process, and the three levels, and the third one's incredibly difficult, I know. And and to do that basically while going on leave and having twins with another kid already is pretty impressive. So I was already impressed, and that's even more impressive. And UCLA is a great program there too. I mean, what was your favorite part about business school? I mean, obviously you were working. You've got a kid too at that point. Is that right? You had one kid
Mhm.
then. I mean, what was your favorite part about business school? Because obviously for different people, they're gonna kind of do things a little bit differently, right? Yours is a little bit different than the probably 22-year-old that's not working in a business school, right? As you were kind of doing multiple things at once.
Yes, a few things. First of all, obviously network, right? Like it's incredible. You're learning from your peers just as much as you're learning from the professors. Like everything is based on case studies, and you have like a lot of opportunities to just discuss and apply that experience right away at your job. So that was great. Another thing I would say, business school gives you a lot of opportunities to understand what is that career path that you want to pick for yourself, because I knew that I want to be in finance. I didn't realize that finance is a very broad, field where you can go into corporate finance and investment management and private wealth and private equity and venture capital. And so business school gives you like that understanding and gives you the exposure, right? Like they have, for example, like days on the job where they would take you to the actual companies, and you will see, like you will have an opportunity to talk to portfolio managers or like some other professionals and understand like what their day looks like, what type of skill set uh, you need for the job. And it was very revealing because before, like prior to me going to business school, I actually wanted to be a portfolio manager. Like I wanted to manage investments. When I got to business school, I realized that before I can become a portfolio manager, I have to spend a few years as a financial analyst. And that's actually something that I did not enjoy naturally. Like just going through files and files of financial statements, I'm like, okay, this is not enjoyable experience for me. So maybe like I need to pick a different career path.
Yeah, I really wanted to be in private equity, and when I went through business school, and I did start in private equity, and then kind of, realized at least the place, that where I kind of went into probably wasn't right for me, and ended up kind of leaving that all for a while, and I guess I'm closer to it now, but yeah, it's I didn't know that. I probably still don't know all the different areas of this profession that are out there. Like I feel the same thing. Like I kind of thought of finance maybe as more of a cohesive unit up until then, and then all of a sudden you realize like, wow, like as you said, like wealth management versus like what an analyst does, they're really not that related, right? Like they're very different jobs in this sector. And then you said that you went and you were an analyst for a little bit, or when you went to the VP role, what were you doing there, I guess?
So during the business school, I got internship at JP Morgan in the private wealth. I really enjoyed the role. And after business school, I joined Capital Group, but also in the private wealth division. So
Okay.
like I decided not to pursue that path of like being an analyst and then portfolio manager. But private wealth was pretty interesting to me because you get an opportunity to manage wealth and give advice and figure out the asset allocation for the clients and help them with like wealth strategy, for the entire family, like multi-generational planning. So like very interesting. I really enjoyed it.
Cool. So I mean, what was probably the hardest thing about that, though? I mean, private wealth's a lot of fun. I mean, what was it that maybe challenged you, or that you didn't expect about it?
Um, so what was interesting, like the observation when I was in private wealth and specifically at Capital Group, is that like we were like most of our clients were older, like 50, 60, 70 years old. And when it came down to the generational transfer to the younger generation, that's where, like, I realized that Capital Group, and not just Capital Group, but across the industry, we were losing clients to technology. And that realization came to me before I even knew this, term fintech. Like I actually came like pretty like late to the game. I probably learned the term fintech when it like, in 2016, but it was around for like 8 or 9 years already. But the realization came because of that. I just looked around and I'm like, okay, Capital Group is trying to innovate and they building the app for this, for their clientele, but their clientele is not very interested in technology. But the kids are not staying; they're leaving someplace else.
Yeah, so you're seeing that kind of intergenerational wealth transfer and kind of the impact that technology was having on it. I mean, was there much of a strategy to engage the children at that time there, or like were you really working with the ones with wealth and not interacting with the family too much?
Yeah, we pretty much just focused our efforts on on the people who control the wealth, and they were typically
Yeah.
boomers. Um, and another thing is that, at that time, like Betterment and Wealthfront, just, got pretty popular. And, I came to the realization that, longer term, the large financial institutions will have difficulty, competing with those like,
Yeah,
incumbents.
and I like the some of the stuff that they're doing, and Betterment I've followed for a while. We've had John Stein on before, who I've known now for a long period of time too, but he's recently,
Hmm.
I guess as of last year, I think out as CEO, but I know they brought a new person in. But yeah, I think that obviously we can kind of shift through this comment to the technology, but I'm kind of in this similar mind. I think we're going to see a lot of very disruptive technology that can bring things to scale, more than some of the other kind of services. And sometimes people use the term like democratization of advice too. So obviously that kind of appeals to you to some degree, right? Being that you laid out your your goal at the beginning.
Hmm.
So when during this time, right? Obviously you're at a very good company, right? Like Capital's a great place. But when did you kind of realize, hey, I'm going to go out and try to build something? Was there a moment when you kind of realized that, or sat back and said, yeah, I got to go try something else?
So it wasn't like a moment. It was probably like a journey, like my mental journey with like observations and like realizations what was broken in the industry. So I spent about 4 years at Capital, and throughout my time there, like one thing that I realized was very clear is that for all of our clients, saving and investing for their kids was their number one financial priority. They rarely asked us about their own retirement, right? Or like, the brokerage account. Like most of the questions were about, trust and estate planning for the kids, college savings accounts for kids, custodial accounts for kids. And like being a parent myself, like I realized that yes, like it's very natural desire. Like once you have a child, your priorities switch, and you feel responsible to, save for their future ahead of yours, right? So very kind of natural. So that was like the first realization. The second thing that happened is like obviously like I graduated from UCLA Anderson with ton in student debt, right? And all of a sudden I understand that this is not just my problem, like an individual problem. It's the problem of the entire generation. All of us being burdened by student loans. And I started getting a lot of questions from my friends from UCLA and other business schools who graduated with student loans and started having kids. Same question on their mind: how can we start saving for their future so like they can avoid this huge problem like 10, 15 years from now. And when I gave them solution from Capital Group, like probably like 20 friends approached me. I gave all of them the financial application. Like most of them just pushed back, right? And then like no one took advantage of it, regardless of how much I was emphasizing the advantages, and like this is like the top plan in the nation, you should take advantage of it. And so that kind of was my kind of aha moment. I was like, so what is wrong? Like, why not taking advantage of this plan? Like, I see that you really want to save for your child. It shouldn't be that difficult to fill out this financial application. And the response that I got from my friends was, Ksenia, we all already trade on Robinhood, and we send money via Venmo, and we shop on Amazon, and it's just like
Yeah.
all mobile right now. So that's when I started kind of paying like very close attention to fintech and understanding that yes, financial technology is taking over and making things simple and efficient and affordable and accessible for this new generation of people. But nothing really exists that would solve this, one goal for parents who would like to save for their kids' future.
So when you started, this kind of starts to come to mind, right? You're having this journey. I mean, I guess, did you start scoping the possible business before you kind of started building it, or did you say, like, because obviously you kind of identified, hey, there's this need out here. Did you know exactly what the business or the solve was going to be yet, or did you just kind of know at the start there was a need?
I knew there was a need. I did like a little bit of research. Like I looked at the industry, just like, okay, is it the problem like worth solving? Is it the problem that would make me quitting my amazing job at Capital Group, justified and smart decision. So like I was just doing a ton of just research like during my weekends and like evenings, and like one interesting like piece of statistics that I found out was that 70% of people in the United States don't even know that 529s or UTMAs exist, and that was like a huge kind of factor for me because I'm like, okay, the awareness is so low that by using technology, we can, really capture this huge segment of parents that are not served by by traditional financial advisors. And then basically, I made a decision to jump the ship with Capital Group, and I figured out the business plan and like all of the nitty gritty details that go into starting your own startup.
Yeah. Did have you raised money? Was that an early stage thing for you, like right away, or how did you kind of approach the capital side of it?
Fundraising is always fun. Uh, so I invested my own money first. It was like about 150,000. I raised a little bit of money from the angel investors that knew me and like my track record and just like believe in the opportunity. But definitely raising money from venture community was a completely new experience to me, and it wasn't that easy, right? But I guess like it's never easy for any entrepreneur.
Yeah. I was like, right, you can't spell fundraising without fun, right? You had that right.
Exactly.
Yeah. And okay, so tell us a little bit, like, how's the company set up today? How are you operating? Obviously, you mentioned, well, UTMAs, UTMAs, or and then 529s. So, walk us through, what are you doing? How's the company set up, operating? What's kind of the general structure today?
Yeah, so right now, like what we build is a money app for parents. Why do we call it money app or not like investment app? Because the platform actually gives parents an opportunity to save for the kids in multiple ways. So first of all, they can start the tax advantaged account for kids, UTMA, and I'll tell you like a little bit of a background why we switched from 529 to UTMA. But that's like one way they can save. The second one, they can get unlimited gifts from their friends and family right into their child's account, and it works in a very like simple way. You don't need to even like download the app like Venmo. It's even simpler than Venmo. It's just works through shareable link. And another way is through our brand partners. So we partnered with over 90 brands, including like big names like Disney Plus and Uber Eats and DoorDash. And every time when our community, like our parents, shop through those brands, they get financial rewards right into the UNest account. And those financial rewards can be, like they range from $5 to $100 depending on the purchase. And plus, like if our parents make referrals, they can get, anywhere from $15 up to $1,000 depending on how many, other parents they refer. So like it's an amazing way basically to get your child, like give your child a head start in the future with help of the community.
It's awesome. And, I guess, why did you go the brand partners? I guess that's an interesting kind of setup. So what was it about that? Because that's not always, I mean, some spaces, but I would say this space that's probably not the most normal route. So you saw some opportunity there to partner with bigger brands, and I think you have a brand ambassador too, and like so that's a little bit different of an avenue to approach it by, which I find really unique.
Yeah, we were looking for additional ways to provide value to our community, and so people don't like parents don't feel burdened that we actually like they actually have to sign up for like recurring deposits, or they have to find this like money to invest in their kids' future. We're thinking about the ways to give them a simple opportunity to add money into the child's account seamlessly. So the first one was gifting, right? Like, just, okay, you can involve your grandparents and friends and get money for the birthdays and Christmas and all of that. But another one that was adopted by other fintechs as well was just, partnering with brands. And since you like need to spend anyway, right? You might as well just go to UNest app and make those purchases, but you know that your spending is correlated to savings, and every time you spend money or buy something, your child actually gets financial reward, in the UNest account.
Yes. And so if I we'll pick, I think you mentioned Disney Plus, and that at least I know that one. So what's another one that might have more? A DoorDash, right? I think you mentioned
DoorDash, we have Haven
DoorDash.
Life, like life insurance is
Okay.
actually super popular as like a complementary financial product.
So I go to look at life insurance. I go to buy something on Disney Plus. How is it then interacting with UNest or through the app, right? So I download UNest and I go to spend there. Is it kind of rounding up? Am I just getting additional pushes to contribute then, like when I make a purchase? Like, what's the behavioral kind of triggers there from the consumer standpoint?
Yeah, so we have like different sections. So for example, you can pick, oh, like I want to look at baby products, or I want to look at consumer products, or I want to look at life insurance. And you go into that specific section, you choose a product. And so for example, with Disney Plus, like if you sign up for the Disney subscription, which is again like pretty relevant to you as a parent because you have kids and they watch TV, we will give you, let's say, $20 into your UNest accounts after the subscription. For life insurance, it's even simpler. All you need to do is to run the quote with, like, let's say Heaven Life, and you will get $5 into your UNest account just for the quote. Or like one of the like amazing partners for us is Harmonic Insurance. All of our parents can actually get up to 10,000 in free life insurance if they sign up through Harmonic just for the quote.
Okay. And so as you've been kind of, I guess, rolling this out, what's been like kind of probably what you've been more surprised on from either like a hurdle standpoint getting over, or just on the flip side, right, a success standpoint? Have you got into some of your goals faster than you thought you would to, or have there been hurdles that you didn't see coming, which I'm sure there's a little bit of both, right?
You mean like with the entire business?
Yeah, like what's been a hurdle you didn't really expect that you might have run into, right? Have you had kind of a challenge that you weren't foreseeing yet?
Yeah, I would definitely say fundraising was more challenging experience than I would expect. And again, like, you see all the statistics that, female founders only get 2% of venture capital. I did not realize why. Like, I thought that the problem was just with, with not that many women wanted to start businesses.
Yeah.
But when I started the business, I was like, okay, like this is such a brilliant idea. Everyone would, just come to me like with piles of money, wanted to invest. But I realized that this is very much a relationship business.
Yeah.
And obviously, like, you need to network and you need to become part of the community and you need to get access to capital by becoming like one of those people that come to the same like events together and the chat, and like there is like a buzz around the company. So it was like very interesting. I actually did one interesting thing I want to share with you. Before starting UNest, I went back to business school to UCLA, and I took one class on venture capital and entrepreneurship because I was like, okay, this is something I've never learned in business school. I might as well go and ask professors and my classmates how it works. And I would say that everything I learned over the 3 months wasn't applicable to real life, like 0%. So I was like so bummed that I learned all of that, and like over the next 3 to 6 months, I realized that everything I learned like just wasn't applicable. Like, for example, like in business school, like we learned how to write a business plan, and I wrote a very comprehensive business plan on UNest that was like 40 pages long, and I put a lot of thought into the business model and financial projections and all of that. And throughout the fundraising for my seed round, like no one ever asked me about business plan. All I had to do is have like 10 pages long deck that was
Hmm.
like very simple, and like I had to like really like simplify it and make it like very digestible for investors. And maybe like the financial model would be like another document that any founder would have, but business plan is definitely not applicable to real life.
Do you still make business plans though for yourself, or do you scrap that now?
I do not have a
Yeah.
business plan for myself, like in that same form. Like
Yeah.
now, obviously, like we have a much better, corporate governance. We have a board. We
Yeah.
have like lawyers. We have board observers and advisors, and we have like a great continuity from the board meeting to the board meeting, where we discuss like direction of the company and the product roadmap and partnerships. So it's kind of like everyone knows the direction of the business and the business goals and the business plan. It's interesting how you start planning like in between of the rounds, like you close the round and then you understand like what are the next milestones, and based on those milestones for the next round you understand what type of partners or like how many users or like what type of revenue you need to bring. But it becomes like more of the fluid process versus just like rigid business plan paper.
Yeah. Well, it's also, I don't know if it's I guess, as funny is not the right word. Disappointing maybe is a better word, but you're I just had another guest on who I've known for a long time, Madeline Para. She started Twizu, and then she just started a company in the fintech space called Purple Dot. And she answered that question actually the exactly same, which was the fundraising part. As a woman founder, she said, I know everyone struggles with fundraising, but she kind of brought up a similar thing that, like, she was like, oh, this isn't going to be that bad. Like, I know how to pitch things and talk to people and network. And she's like, and it was a lot more challenging than she thought it was going to be. And, yeah, so it's interesting to hear that from another person. And, yeah, she'd actually be probably a really cool person for you to meet at some point. They do, like, kind of like e-commerce, like, waste, like pre-order stuff, and then like more or less help companies pick the right amount of like orders to build over time, right? So you're not wasting as much. But it's kind of an interesting concept there, kind of tied to some of the things that you're working with some of the other brands. So
Yeah. No, I would love to meet her, and it was interesting. Like, when I was invited back to UCLA, like already, like, going through my seed
yeah,
round and Series A round of funding, like, and students were asking me, like, how was it like during the fundraising? I was like, look, guys, you know that only 2% of capital, like venture capital, goes to female founders. In fintech, I would say it's 0.0002% of capital that goes to fintech founders. But I would say that if I was able to raise money, then anyone can. Right? It was so complicated. You can actually find your ways to navigate the
yeah. Well, that's
system.
good. You can serve as a source of inspiration for the next female founder, right, out of UCLA that says, "Hey, I can go do it now too." Um, so obviously you've kind of hit this a little bit before, but I know I want to be cognizant of your time. But when you kind of step back on your mission, what is it? Because you usually the last part is, what is it that you kind of want to achieve, your mission, whatever your goal is. I guess the better question is, do you feel that you're on track, and is there a bigger mission that comes along with giving everyone this opportunity to save for their children's future? I mean, how do you see that this playing out now from here to the future? Right, it's a great pitch for the investors, right? You're on track, and we're going to get there faster
Yeah.
than we expected, right? With a bigger impact.
Yes. No, like I would say that the overall company mission is to make sure that all parents, regardless of income levels and economic background, have ability to save and invest for their kids' future, to build a better future for their children, right? And I would say that like this is the overall mission, but I would say that if you look at the details, right, it's not just giving them the right tools, but also giving them the right knowledge, giving the right knowledge not only to parents but also the kids. So I would say like if I look at the company 5, 10, 15 years from now, like, and I would say, okay, was it a successful venture, and did we accomplish everything that we wanted to accomplish? The way I would evaluate result is, first of all, I would want to see this, student debt problem in the country be like, at much
Yeah.
lesser extent. Second thing I would want to see is that all those kids that are starting on the platform right now, they actually graduating into adult life, being financially educated, having like a great investment account or like that kind of savings nest, and also having a great credit score. Because like another interesting observation is that a lot of 18 years old, they don't even have credit. Like that would be the next opportunity for us to solve as a company, just to make sure like we release the secret credit card, and kids can start establishing credit when they're 13, 14 years
Yeah, I
old.
mean I haven't even thought about all those opportunities, but that's pretty interesting that you might be able to watch somebody literally from before their birth potentially with an account, right, all the way
Hmm.
through them hitting 18, going to college, and setting out on their own inside of this system. So that's a pretty amazing thing. Well, you did say you were going to tell us, so I'm going to pull back one more time. So why did you switch to the UTMA accounts also, right? The for those who aren't aware of them too, it's a good little pitch for that.
Yeah, so we actually started the platform, we started the company focusing on 529 accounts, because coming from Capital Group, I was a big fan of 529s. I was thinking that, okay, this is the tax-free account that's meant for education. Obviously, like I'm a big believer in education and opportunities that it brings. And all of our clients at Capital Group were taking advantage of 529s because of the tax shelter. What we realize is that we are serving a very different segment of the population. And when we got to the first 20 or 30,000 users on the platform, we started getting a lot of feedback. And that feedback intensified during the pandemic when
Hmm.
education shifted online, and a lot of parents like started being concerned that the cost of education is not sustainable. And some parents just were telling us that they have like different priorities for kids. Like quite honestly, not all parents want to save for college. Some parents want to save for the kids' first, car or down payment on the home. And a lot of our users, a lot of our families also rely on financial aid and scholarships. So with all of that feedback combined that came like, at a very fast pace from our customer success team, we decided that probably UTMA would be the better solution to solve that same problem that we're solving as a company. But basically, the difference between UTMA and 529, just really quick, 529 is an amazing tool. Like I said, I was a big fan. The big disadvantage of it is if you don't use it for education, you lose all tax advantages, and you're gonna get in a penalty of 10% on the earnings portion. So with UTMA, it's also investment account, it's also tax advantaged, but you don't have to spend it just for education. You can actually spend it on anything that benefits
Yep.
the child.
No, that's a good run through on that, and I find that very interesting. Well, I know I think maybe even the one beep, if people still hear, might be the hey, I need to go get ready to do something else too. So, for you, but this was really fantastic, and I really enjoyed spending time with you here today. I love the mission, love what you're building. Really excited to kind of see it continue to grow and take off. And I guess the last closing thing is, where are the best places to find you, the company, any of those things here as we close out?
Yeah, so you can find the app in the App Store or Google Play if you just search by UNest, or you can go to our website, unest.co, and find a lot of information there. And I would definitely encourage everyone, like even if you're not a parent, find a kid in your life that you love and that you care for, and start sending gifts, around birthdays or Christmas or other special occasions, just so parents don't feel like they are alone on this journey. I really would love to see this as a social experience where like the whole community is involved to helping build
Yeah,
the better
that's
future for
awesome, and
kids.
it's capital U then Nest, right? So not like YOU, right? But how did you come up with the name too? That's always a fun thing. We'll close on that.
Um, like nest is obviously like, just like building financial nest, or like, when parents uh, see the kids go off to college, you call them like empty nesters, right? So the nest is something that resonated with me as, like about like parents and kids. And I just wanted to make sure like we care about people, like this is about them. Like, so this is you building a nest for your kids. So that was the premise of the brand name.
Well, that's awesome. Ksenia, thank you so much for coming on the show. And it's a fantastic interview. Good luck with everything here for the rest of the day. And I hope to connect with you later on at some point. And to all the listeners of Framework, thanks for checking in to this episode of the Framework Podcast.
Thank you, Jamie.